So in the past few months, I made a few $1,000 trading the market, and one of the strategies that I've been using consistently is the RSI strategies. So in this video, I'm gonna share with you some secret RSI strategies that you can start using today to make money in the market. Now, before we move forward, let me tell you about a website called Fastable.com. Fastable.com is not only the sponsor of this video, but it is a website that can give you amazing results and improve your trading. Number one, you can get AI signals from Fastable.com. You can also get professional analysis from professional traders on their website. You can also get economic events. Economic events are events that are likely to get high impact to the market. And if you don't want to trade the news, and if you don't want your edge to be affected by news, you need to stay away when the market have high impact news. Make sure to check out fastable.com using the link in the description below. One of the biggest mistakes that I've ever made as a trader is trying to trade and trying to catch market reversals. You see, it's very tempting for you to try to catch reversals in the market. Why? Because you think that if you catch a reversal, you are going to get a very big move. But the truth is, most of the traders who try to do this, especially as beginners, we are likely going to fail. Why? Because number one, we have emotions. Number two, we can't stay away from the market for a long time. So we don't have patience for us to go and say, I wait for the market to reach this level before I place a trade. So that's why one of the biggest advices in trading is the trend is your friend. If you catch a trend which is already going in its direction, you are likely to just ride the trend and make money as the market moves, rather than trying to catch the top or the bottom of the market, which is very, very difficult to do. So when most people think about the RSI, they start thinking about the overbought and oversold. But let me show you a secret technique that you can start using right now. You see, when you look at the RSI and if you go to the fundamentals, or what is the RSI? RSI simply indicates the momentum of the market. It measures the momentum from 0 to 100. So if the market is being overbought, that means there is more buying pressure in the market. If the market is being oversold or is going below 0, it means the sellers are in control and there's more selling pressure in the market, because the RSI is created by the equation of simply saying the average gain divided by average loss. So if the market have more gain, that means it's gonna go to the upside. So that is basically what the RSI does. So if you take that and put it into the market concept, you are going to see that most of the time when the RSI is being overbought, most people are going to try to sell because they think that the market is going to drop. But most of the time the market is just going to hit their stop losses. Why? Because you are buying against a huge momentum of buyers. So the technique that I want to show you here is, when you go to your charts, I want you to go to the RSI settings and I want you to change a few settings here. Either you are using MetaTrader or TradingView, you can do this, but I will use TradingView right here because TradingView now have more features than MetaTrader. So I use TradingView for analysis, and then I jump to MetaTrader so that I can place my trades on my phone. So the first thing that I want you to do is go to the RSI, and then on the zones you are going to put 65 and 35. Change from 70 to 30 to 65 and 35. So what you are doing here is you are just taking the overbought and you are bringing it a little bit down, and you are taking the oversold, bringing it a little bit up. So once we do this, the next thing that we want to do is to be able to catch high momentum candles. So I want to show you something right here. So if you look at this market, you are going to see that at this point right here, the market is going oversold right here, and then the market is pushing to the downside. So what most traders will do right here is just they will start buying, thinking that, okay, since it's this oversold, the market is going to go to the upside, which can happen, but I want to show you a technique that is going to increase your winning rate. So now, as you can see, this market have now gone at oversold right here, and our oversold is on 35, not 30, right? So what we do here is we are looking now for the market to keep going to the downside, because we are going to likely see the market pushing lower to go to the level 30 right here. So in this case, you are going to see that if the market is right here, we are likely to go to the downside direction. So I'm just gonna mark here, and I'm just going to show you what I mean by this. So if you look at this point right here, you are going to see that this market is going to below 35, which is going towards our oversold. So if the market is oversold, most people will likely want to buy in that market, thinking that the market is going to reverse. But when you do that, why is it that most of the time you end up losing that trade? So what I want you to do is, since you raised your oversold to 35, when the market goes below 35, you want to keep selling as the market pushes to the downside. So in this case here, it was even better because we see the market breaking below this zone right here, and we are expecting prices to push to the downside. You can just place a trade based on this, but I'll also show you how to even increase the win rate by using a multi-time frame. But you can just, even after seeing this, you can sell here, and then you put your stop loss. And then in this case, this trend is not going to be a very long trend, because remember, when the market goes oversold, it will move a little bit, and then it will move to hit stop losses of most of the people who are buying. So you want to make sure that your take profit is near. So you can use 1-to-1 risk to reward ratio, and this strategy, you've got a high win rate. So you can use 1-to-1 risk to reward ratio, and you can expect prices to push to the downside most of the time, because the market wants to go to the oversold, right? So now you can see the RSI is now at 25, and our trade is in profit. Why? Because we just managed to get momentum. So if you have a small account and if you're trading maybe half margin or full margin, this is a good strategy for you to enter into the market, right? So I will show you more example of when this happens. Now let's look at another example. So if you look at this right here, you can see right here that we see the market pushing to the upside. So as the market is pushing to the upside, most people are going to be looking for a reversal trade right here. Why? Because they know that if the RSI goes above overbought right here, it will likely go to the downside. This is the basic knowledge that everyone has. But I guess most of the brokers or market makers or institutions, they know that people know this, because this is just general knowledge. So why is it that whenever you place a trade right here, your stop loss is going to be hit first before the market pushes to the downside? Maybe it is because these people knows that you are placing these trades right here, so they are placing bigger trades to counter your trades, and then you end up losing more than what you intended to lose, or what the strategy have for you. So I think that when seeing this RSI going above this level, so on the upper side here, it's level 65, right? So it's, if it goes over 65 here, and then you can see that here we have another breakout again. Most of the time when the RSI goes overbought or oversold, it does that near a level of structure, because the market will be pushing towards that zone, and it will be likely wanting to break that zone. So in this case, you can see that you could have again placed another trade, put your stop loss, and then 1-to-1 risk to reward ratio, because this is going to give you a high win rate. Because most of the time when the RSI goes towards 70, it keeps moving until it reaches that zone. So you are going to make money, you are going to lose money in another trades, which is exactly why you need to backtest this strategy before you start using it. So for me personally, I trade this strategy because most of the time when I see a breakout to the upside, that is an opportunity to show me that right now the market have a lot of momentum, so the chances of having bigger pullbacks is less. So we are going to keep going with the market. So when I'm trading a small account, that is a good idea for me to place a trade on that point. Right now we can see that the RSI have moved above level 65. So if the RSI goes above level 65, we look into the market, and if we see that if the market have just broken above any zone, and then if there is momentum in the market, So which is the zone that the market have just broken here? You can see that the market have broken this zone right here. And if you take this here, we are going to likely see that this zone was also a strong zone in the past. So in this case, it wasn't. But then we have another zone just down here. So as you can see, once the market break here, it also created a higher high and breaks another zone right here. So this is a good zone for me to place another breakout trade. And this breakout trade is confirmed by the RSI being in high momentum here. And now the third example, and I think this is going to show you exactly what you need to look for in these trades. So you can see again the RSI have gone above level 65. So when the RSI goes level 65, we look into the market and we see if the market have just broken after a previous level of structure. So in this case, we have again another level of structure, which is right here. So it's not very clear, but we can see that the market have just closed above the previous closes right here. And if you want to place a trade right here, we are confident that the market is going to push to the upside, right? So if you think about it, let's say you place a trade right here, you put your 1-to-1 risk to reward ratio, and what is going to happen here? Let's see what happens. So you can see the market pushing to the upside, and then your stop loss was almost hit. And what does that mean? This shows you that there is no holy grail strategy out there. I would love to get that strategy and to be the one who find that strategy and give it to you guys and help all of you. But to be honest, there is never going to be a holy grail strategy. There's never going to be a strategy which wins always of the time. You are going to lose some trades, you are going to win some trades. And this was a perfect example for me to show you that you are not always going to make money in the market on each and every trade, which is why you need to learn risk management, you need to learn trading psychology, you need to have a trading plan. If you want to get a step-by-step guide on how to become a successful trader, I have a course coming up. It's going to be free. I will leave the link in the description below. It's not already launched, but I will leave the link in the description so that you can register and wait for the course as it comes up in the coming months. Now, let me show you technique number 2 of using the RSI indicator for you to get high probability trades, which is to use multi-time frame analysis. Now, when you use this strategy, you can make a lot of money in any time frame. But if you want to even increase your chances of being successful, you can combine 2 time frames or more to make money, to make your trades even high probability trades. So if you look at this example here, we are using the same concept, but now we are using the 1 hour time frame. So we are looking at the RSI, and you can see the RSI crossing above level 65. Once it crosses above level 65, we know that it's likely going to go to level 70. So what do? We look into the market and we look, is there any zone that the market have just broken out of? Right, and we can see that there is a zone here. The reason why we need this zone is because we want to make sure that, let's say the market makes a pullback and then pushes to the upside, this zone can help us also to make sure that the market doesn't go and break our stop loss, right? So once we see this zone right here, the next thing that we want to do is we want to predict how much this market is likely to move. So if we were doing 1-to-1 risk to reward ratio, maybe we just do something like this, right? So maybe we just put our entry here, our stop loss, and then maybe it would look something like this, 1-to-1 risk to reward ratio. But then instead of just placing this trade right here, what we can do here is we can delete this order. We can mark this zone right here. This is where we are going to be entering the trade, and we are likely going to exit the trade maybe around this zone right here. So you can even use the ATR indicator. So if you search for ATR, you can get average true range. Average true range simply means the average movement of the candlesticks in the last 14 periods. So you can get the average true range here, and the average true range is going to show you exactly how many pips the market is moving with on average. So if you look at this market, you are going to see on the 1 hour time frame, on average, the market is moving 25 pips. You can see here on my cursor right here, right? So from here to here, we want to measure 25 pips. So we are going to measure 25 pips, and we are going to do 2 times that. So let's just say 50 pips, right? So 50 pips is around at this zone right here. So I'm just gonna drag this and do this. So this is exactly the zone that we are likely going to get our profits from, right? So from this zone to this zone, this is just a technique that I've been using, and I'm still testing this. And if you guys use this and think it's helpful, I will be happy if you leave a comment in the description below. So once we get this number of pips, the next thing that we want to do is drop down to the 5-minute time frame. So from the 1 hour, we can drop down to the 5-minute time frame, and this is where we place our trades from, right? So now once we get this zone here, the next thing that we'll do is we go to the 5-minute time frame, and when we go to the 5-minute time frame here, you're going to see that the RSI is also above the 65 zone, and this is the zone that we think the market is going to go about. So the next thing that we can do is we can wait for any type of a pullback that comes into this zone, or we can just buy at this point. But waiting for a pullback on a smaller time frame is going to be a high probability trades for you. So now, as you can see, the market just made a pullback coming back into this zone that I just marked right here. So when you get this, you are also going to get even a bigger trade. So I'm just going to place a buy trade here, and we said we are going to take profits either at this point. Let's just put our stop loss right here, 2-to-1 risk to reward ratio. Now this is the advantage of using multi-time frame. You can get good risk to reward ratio on these trades. So now that you can see, the market is just coming back into this zone over and over again, but it will likely push to the upside. Why? Because we have seen this through the RSI, which is showing you that the market is in a high momentum trade. So you can see right now that the market have just made a 1-to-1 risk to reward ratio. At this point, it's up to you. You can drag your stop loss into very tight positions so that you can increase your risk to reward ratio maybe, and then you let the market trade. Sometimes the market is going to go to your take profit, sometimes it's not going to go to your take profit. But as you can see right now, the market have been moving right into our take profits, and we used multi-time frame analysis so that we can get, number one, high momentum trades on the higher time frame, so the market is likely to move to the upside. Second thing, we dropped it to the lower time frame. We find areas of value, we find where to place our trades. Because if you look at this, you can see that on the lower time frame, if we didn't get our trade right here, there was a lot of chances again to get our trades, because we already knew that our higher time frame is in high momentum to go to the upside. So here it's all about finding when to place a trade on a lower time frame, and you can use a lot of technical analysis. You can see the market was bouncing on this zone multiple times. You can use breakout. You could have used the breakout of this zone right here. You could have traded this breakout. You could have even traded again another breakout here. Maybe you had missed first one here, the second one. You could have even traded, because remember we said we were trading breakouts on our first examples, and now we can still trade these breakouts on smaller time frames, but knowing that the bigger time frame is in a high momentum and is likely to push to the upside. Let me show you one more example, and then I give you a step-by-step strategy that you can use right now to trade the RSI. Now, looking at this example, you can see that on the 1 hour time frame, the market have just gone below the oversold. Our oversold is not at 30, it's at 35. So that the market goes into our oversold a little bit earlier than most of the people. So if you look at this, you can see that the market have gone below our level 35. So we want to see if there is a zone that the market have just broken. It is there. So this is the zone, right? So this zone is going to help us to place our trades. So number one, the higher time frame is oversold. The market have just broken a zone. So we want to sell, but not just selling right now. We can go down to the 5-minute time frame, and we are going to most likely going to get an even better trade. So let's go to the 5-minute time frame and let's see if we can get a trade right here. So marking the 5-minute time frame, you can see something interesting right here, right? You can see that the market just broke here and retested, right? Which is a confirmation for us, right? So the market breaks and retested. So if you don't see what I'm seeing, the market breaks here and retested. Now this is a perfect zone to place a sell trade. Before placing a trade, we confirm again. We see that our RSI is still below 35, which shows strong selling momentum. The market is going to be oversold most likely very soon, so there's more sellers into the market. So if we place a trade here, we have a high chance of making money. So we can place a trade right there. We can even wait for the market to break this zone again to place a trade. But for me, I would hesitate to place a trade like this. So I will do this. My take profit should be more than. So let's just do 2-to-1 risk to reward ratio. If the market goes 1-to-1 in profit, I'll move the stop loss back into break even. All right. So the market looks like this now, and we are going to maybe lose this trade or win this trade. I don't know yet, but we are going to likely make money. Why? Because the market is showing you multiple confirmation. Number one, the RSI is going down on the bigger time frame. Number two, on the smaller time frame, the market is creating break and retest trades, right? So we placed the trade, and I said you could have also placed the trade after the breakout. You can see there's a breakout here. So if you missed the first trade, you could have placed again another trade right here to look like this. Now because we have a zone here, so our stop loss is going to be near here, so it's going to be something like this, right? So this trade may either win or lose, but it's all going to come down to the probabilities after a long period of time, right? So you can see this second trade here most likely hit the stop loss, but the first trade is still completely safe. So let's see what happens. So the market is still ranging, which is the reality of trading. You are not going to always go directly into your stop loss and take profits. Most of the time, the market is going to play with your emotions, just like it is doing right now. So if you don't learn trading psychology, this is going to be very difficult moments for you to be trading in the market, right? So the first trade you have gotten already almost 1-to-1, but I could have moved the stop loss, but then I'll just still wait and see what happens. So most of the time the market is going to retest a zone multiple times. So if you see the market retesting a zone multiple times, that zone is going to act as support or resistance. So the first trade here could have lost if you pressed a little bit late here, also depending on the stop loss, but then the first trade could have won, and you can see the market pushes to the downside, and that is the main point what I'm trying to put out here. So if the market is going into oversold, it doesn't mean you should oppose that trade. Go for that direction, because that is where the momentum is going. So if you was to say what is the strategy here step by step, here is what I'm going to tell you. Step number one is going to set your RSI levels to 65 and 35. If the RSI goes above the 65 zone, the next thing that you want to do is look into the market and see if there is any zone to the left. So let's say the market was moving like this, and then it breaks here, and then on this second move here, the RSI goes above 65. You want to look into the market and see if there's a zone that is just broken. The market will likely retest that zone and then goes to the upside, or just go to that upside, and this zone is going to help you. If the market reverses, this zone is going to likely hold on your stop loss. So that's simply the strategy. On the other side, if the RSI goes below the level 35, you are looking to sell. You just want to make sure that the market have just broken a previous zone right here, so that if it by any chance reverses, this zone can help you to hold up your stop loss. And you can use multiple time frames as I just showed you in this video. If you guys think this video was helpful, then you need to watch this video coming up on the screen right now, which is my latest video, which has even more information. Thank you for watching. If you are new to the channel, subscribe, and I'll see you in the next one.